How to go from no houses to 175 units. And now spending your time giving back. That's today's episode.
Here we are at our very first rental property.
Welcome into the Investing in Real Estate show, everyone. I'm Clayton Morris. So great to see you. And our guest today is Michael Zuber. He is that person. He's that investor who went from 0 properties and then all the way up to 175 units. And now he focuses on helping other people do the very same thing. And Michael is my guest on today's show. Michael, welcome to the show.
Thank you, Clayton. Pleasure to be here.
Well,
love that intro.
Well, thrilled to have you here. And I love this story. You know, we haven't really done a show recently where we've kind of dove into the mechanics of that, right? When people are watching this, it's very easy for you and I own a lot of rental properties, you own a lot of rental properties. It's easy for us to kind of forget that there are a lot of people who are just starting, right? That have no properties at all and who are looking, how do you scale that? How do you go from 1 to 2, then 2 to 4, then 4 to 8 and on and on and on. So I'd love to really get into that with you today. But before we get there, just take us back a little bit. How did you get started in real estate investing? How did you know that it was for you? Did you leave a career in order to start this way?
Yeah, so my story probably starts like a lot of the folks that I've heard about. I was so I'm an accountant by training. Coming out of school, I did that. So I'm very analytical, if you will. And I thought that stock market wealth was the way that I would sort of get to financial independence. And did pretty well during sort of 1999 and 2000. Even doing some mixing of day trading and the like. And as you might recall, that in well for lots of folks, and that included myself. I remember a 48-hour window losing 6 figures.
Wow.
In some bad trades. So I realized that I wasn't going to get rich that way. And I remember driving to the bookstore going, I have to find a better way because I'm not an athlete. I'm not an artist. I wasn't going to I wasn't going to invent anything. And real estate was there because it's real. You can touch it. You can use the inefficiencies of the market, right? Find a seller who doesn't want it, right? A motivated seller, polish it up, create some equity and have it as a whole or sell it off. So real estate really became the thing that just was my answer to ultimately being financially independent, 15, 16 when I started.
Before we kind of get into the real estate part of this, I'm just curious, given what we've seen in the market over the past few weeks and this year, declines of 600 points, wiping away all of the gains of the year, seeing some real kind of trouble on the horizon. Do you see any similarities from what you were going through, losing 6 figures in the stock market back then to some of the similar fundamentals today in the stock market?
Yeah, actually, it's kind of eerie when you want to know the truth. I think there's a lot of people sitting on paper wealth, paper net worth that really isn't anything, right? It's numbers on some computer somewhere. And if you haven't learned anything learn from my experience, that can be wiped away in a day, right? One company, not even in your sector, can report an event, and pretty soon we're down 10 or 12%. So I think there's too many people, paper wealth. I actually have created a 4-letter acronym. It's called CRAP. It stands cash rich, asset poor. And that's what I think is going on right now. Too many people that are cash rich and asset poor. And that's something that I know I'm trying to fix, and I've seen what you're doing. You're trying to fix. So, it's going to be painful for folks.
It's funny because as I try to cover some of the stock market stuff and just at a high level, looking at some of the major news of the day. And I'm from the world of the news business, right? I grew up, I was a news anchor for many, many years. So watching these sort of larger trends, it's easy to kind of comment on them from a 30,000 foot level, which is what I've done over the past few weeks, looking at some of these broader trends in the market, 600 points down. But then I'll get inevitably some comments, even right here on the videos, which will say, you need to educate yourself more because I'm still making money in the stock market. And yet all of these other people are in the comment threads are saying, look, I lost a ton of money before and I'm not going to go through it again. Fool me once, right? And what would you say to those people that are like, you just need to get educated more because everything's roses right now?
Well, I think we've learned in history that all trees don't grow to the heavens. We are at all-time high on lots of different scales, and that doesn't last forever. And if you want to play the game, I have an MBA from a well-known university. And an accountant by training. So if you want to go play the stock market game with me, someone who wants to leave a comment, fine. But it's not for the average person. This is not the time to be investing in stocks. It's just not. Now, if you want to be that one individual who happens to pick the next Amazon, great. Yeah, and somebody won the lottery the other day too, so I get it, right? You'll have those unicorns, whatever.
Right. Yeah, exactly. The unicorn stocks. All right. So let's move away from the stock market, because you and I are in agreement there, and you are an accountant. So I look up to you in that regard. I took my money out of the stock market years ago and put it into real estate,
Smart.
and I will never go back. So, and that's
Amen.
what we try to teach people here, financial intelligence right on this channel to help them make smart decisions. So when you looked at your first property, take us to your first deal. What did that first rental property look like, and how did that sort of spark a revolution in your life?
Yeah, so really where I start this story is that zero that you talked about in your introduction. So I live in the Bay Area, specifically a city view, and everything I had read 15 years ago, Clayton, was invest in your backyard of 30 minutes, right? It's just written in the and
right, drive 30 minutes, and that's the only place you can invest, right here in Mountain View, California, where you are. That's it, right?
Yeah, exactly. And if you know anything about that just wasn't going to make sense for a buy and hold investor, landlord type. So I had to find something else. So I had to answer one question: Do I want to invest out of state, or do I? Because I'm a control freak and I want to be able to go see my properties, meaning get in a car, go see it, and come back. For me, it was the latter. And the market that made was Fresno, California, which happens to be about 2.5 hours from Mountain View each way. So anytime I get a 5-hour day. That's, we found a property in Fresno. You can actually look it up on Zillow if you want. It's 1818 Norris Drive East, 93703. We bought it for $107,000 and it rented for $1095. And that was the first property we had ever seen after spending a year of looking in the Bay Area at the 1% rule. And we thought we'd figured it out. So that was the first house there on Norris Drive.
So this one house, what were some of the pitfalls, things you didn't anticipate when you picked up this first property? What did you do wrong? Because so many people are thinking, they're watching us here, here's Michael, here's Clayton, right? They know what they're doing. We still make mistakes, but take us back. What kind of mistakes did you make on that first deal?
Well, so we did a lot of right things. So we bought it, closed, fixed it, leased it. But unfortunately, something that I firmly believe is real estate tests you, and it tests you lots of times, and we got tested right away. So the story of our first house on Norris Drive ends well, but it starts horribly. So we moved the tenant in, husband, wife, great income, great credit, paid the deposit, moved in, no problems. What we didn't foresee, didn't know, didn't ever. 2 weeks later, they separate. The wife takes off, goes back home to mom out of state. I guess there was problems, obviously. At which point the husband decides to never pay rent and start drinking. And damaging our house. And in California, it takes a while to get people out. So he was in our place for almost 90 days for 3 full months. So our first house, we got first month's rent and a deposit. So call it $2,000 for easy math. We didn't get in for 3 months. We had to pay $1,000 in evictions and $12,000 remodel after he left. So we went basically 4 or 5 months after getting that first month's rent to the next time we saw rent. So that was painful. That, when I talk to when I go speak at real estate events, that I really believe could have walked most people out, right? Your first experience after losing all that money, right, wasn't fun.
No. And I think it's good that we talk to investors all the time, and I think it's going to happen at some point. Now, do you think it's better that it happens on your first deal? Or do you think it's better that it happens on your 50th deal? Because guess what? It's going to happen, and it's probably going to happen multiple times. So if you're watching right now, you're listening right now, if you can build that in as part of your mental process, that you're going to have a bad tenant, you're going to have a contractor that you paid $15,000 to and disappears, which happened to us recently. You're going to have that happen, and it's going to happen either on your 100th deal, your second deal, your first deal. Do you think it's okay that it happened on your first deal? Do you think that makes or breaks people?
Well, so I honestly believe it would have broke most people, because I've seen events like that where they just move on to the next thing, right? Oh, I'm going to go to cryptocurrency or pot stocks or whatever, right? So they're basically looking for an excuse not to continue. So let's story out. So two things to point out. I've had well over 1,000 tenants over the 15 years. I've had two events like this. Yes, it happened to be in our first one, kind of, sucked, and, we got through it. And then we had one like 12 years later in our apartment units. But it only happened twice like that, right? Of over 1,000 tenants. So you're right. It doesn't happen very often, but, as we both know, bad stuff happens in this if you're in the business. And then the other thing to point out about Norris Drive is while those first 6 months were horrible, it was actually a catalyst for us to move from houses to apartments. We bought a house for 107. If you look on Zillow, we sold it for, I think it was 264 or 267. So we had about $157,000 in gains plus whatever it was. We 1031 that money into a 10-unit apartment building, right? So it was one of the catalysts for us to go from houses to small apartments, and we'll own those apartments today. So they're part of the 175 that we have. It was a great house for us. That those first couple of months were horrible.
I mean, we've all gone through it. I'm dealing with some bad tenants right now on a couple of my properties, and it happens, and so, but I want to get into that scaling that you talked about. So you were able to kind of overcome that hurdle, that mental hurdle. It could have been very easy for you to say, I'm going to go back to the stock market. I'm going to
Exactly.
go back to that comfort blanket, even though it was painful. Sometimes the enemy is better than the enemy you don't, right? So you're going to put that stock market blanket back on. You then parlayed that into larger deals. So take me through the scaling. So if someone's watching right now and they're just getting started, they made the plunge and they bought that first house, how do you begin to think about scaling and moving to that next level?
Yeah, so I sort of break my investing into 4 stages. So let's just talk about the first stage. So sometimes people think we started with a big money, and that's just not true. We had $40,000. Now that's probably more than some, but it's not more than most. Right. So we bought that first house with about 20%. So let's just call it 20 grand for, again, easy math, which meant we had another 20 grand for the next ones. Right. So we bought 2 of the first 8 houses with our cash. Then what happened is the market proving, we did a couple of things. First, we did a cash out refi, right? Because I was investing back in 2003 when those were very easy to get done. So we did a couple of cash out refis of those first 2 houses about a year after we purchased them. And then the other thing we did during that phase is I borrowed against my 401k, right? My employer, I had my 401k with, I'd been there a long time, it had balance, and I could take a loan out up to 50 grand, which I did, which allowed us to buy a couple of more properties. So we did have a lot of cash to start, 40 grand. We did a couple of cash refis, and then I got creative and got comfortable borrowing against my 401k. So that took us in about 3 years up to our first 8 units.
At what point did you hit financial freedom? At what point did you say, this is where I'm at. This is where I have this goal in mind that I kind of started with. Did you have that goal from the beginning, or was it something that you kind of fell into?
No, day one. No, day one. Again, I live in an expensive part of the world, and have a family and all of that. So we set a goal of $20,000 was what we wanted to be positive cash flow, right, coming in every month to claim financial independence. We got there probably 2 years ago, sort of some months, not other months. And it wasn't until this last year that we were consistently over that. My wife did retire about 5 years ago, right? Her income wasn't nearly what mine was. But I did exit February 1st of this year. So.
Wow. How did it feel? What did you do on February 1st? Did you go celebrate?
It's actually kind of funny. It actually was a wake-up call. So the first couple of 2 days, you're just on a sugar high, right? I'm retired. You're telling everybody all of that. But I don't know if this was true for everyone, but, sort of day 3 through like day 30, I was a little depressed because I was addicted to being very good at what I did and addicted to the high of helping people. And I ran worldwide teams, and, I was the man for what I did. And I needed to find something else. And hence what you alluded to earlier, right? I had to throw myself at something else. And now it's about telling this story and trying to help other busy professionals, even by 1 or 2. If we can, you and I can help busy professionals buy up to 4, which is relatively easy today with lending, I really feel like we've accomplished something, right? You don't have to get to 175 to feel like I've done success. If I can help somebody get off the dime and buy that first or second one, I've done something. So I had to find that next thing, and this is it.
No, I totally agree, because when we talk to investors and they call our office, one of the first questions we ask them is, what is your freedom number? And I'm in an expensive part of the country in New Jersey where Freedom might be 17 properties, right? It might be
Right.
$12,000 a month in cash flow. It might be higher. You're in an expensive part of the country in Mountain View, California, and you've got a large, family, and we've got 3 kids. But for a lot of people we talk to, I'm often surprised. It could be all they need is $3,000 a month, and they are financially free, right? That'll cover all of their expenses, their gas, their Netflix, their rental payment, and they're free.
Yeah, it's it puts a smile on my face, and I'm sure it does yours, because there's a lot of people we can help get there with only 4 houses, right?
Right.
You have to do a 280 unit apartment building. You can get there with 4 houses, or plexes, or 4 quads easily.
Some of the things you learned along the way as an accountant. So you've done it a couple of different ways, and you've shared some ideas with us here today. You've done cash out refinances. You borrowed from your 401k. And we get this question a lot in our office. And I always say to people, there's no one way to do it. You, Michael, sounds like you've done it just like me, which is I borrowed from my 401k. I used some leverage. I had cash on hand. I used a self-directed IRA. I've done it multiple ways, private money even. So there's no one way to do it. But as you were scaling and you were looking at it from a tax perspective as an accountant, what were things that you put in place then that helped you grow and helped you scale? And maybe you could share it with our audience so that they are doing the same things.
Yeah. So one of the things, and this sort of exiting from phase 1 into phase 2, hopefully everybody remembers, but '08, the market was really, really high because of all this fake lending and all of that. But we realized that we couldn't buy the 9th house or the 9th duplex or whatever the 9th thing was going to be with initial loans, because the prices were too high and my brain wouldn't let me overspend. So what we did is we did a 1031 exchange. So we 1031 out of our 8 properties, and in a year we went from 8 to 80, all via 1031 exchange. And if you don't know what that is, it's basically a way where you can take your equity position from one house and basis and move it into another one, and you don't pay the government, right? You don't pay the IRS, which allows you to get a stepped up depreciation and all these other good things with a bigger purchase price. So that was one thing. The other thing that I do think about when I'm doing owner finance today, that's another thing that you can do is if you strike owner finance deals. I've done a dozen or so owner finance deals where my down payment was less than 5% of the purchase, right? And unlike a bank where it's 10 or 20%, right? You just got to, again, if you listen to the owner for what they want, they usually want a set payment because they're probably depreciated the building to 0. So they don't want to sell it and get this big tax hit. So they'll take a little money now and then a little money for 10 or 15 years, which helps them on taxes. But I like that because I can get a decent purchase and then I get all the depreciation on the back end, right? Because I'm getting I just did a 4-plex like this. The purchase was 232. I only had to bring in 15 grand. And then they finance the rest. And now I get to take, whatever the depreciation schedule is on that. So it's just different ways you can play this.
Absolutely. So there's no one size fits all approach to this. And Michael brought up a great point about the 1031 exchange. We have a full resource guide that we built for people. So if people want to check it out, we'll have it in the description below. It's the ultimate guide to the 1031 exchange because there's a lot of questions that pop up about that. So that'll be down below, or you can just visit our website at Morris.
Definitely review that thing, because if you don't do it correctly, bad stuff happens. So make sure you get that.
Yeah, absolutely. Check that out. So just go to morrisinvest.com/1031. That page will be live for you. So check that out. Michael, we want to get you out of here and be respectful of your time. So what is next for you as you look at the horizon right now and the changes to the tax code? And are you going to go beyond 175 or are you sticking firm at 175?
Oh, yeah. No, I'm pretty active. So the one thing that's because I'm in California, I'm particularly watching now, we have the election coming up, I think it's on the 6th, is we have something called Prop 10. Which you could think of as rent control. Right now, there's only a couple of cities and areas that have rent control in California, but this is basically a proposition that will allow cities to adopt their own versions of rent control if it passes. So that's something I'm watching pretty heavily because I think that's going to have an impact. And I think, frankly, force a lot of small sellers to sell, which sort of feels like the collapse we had back in '08, because really what happened is bad to sell. They were the motivated seller because they were REOs. I think if Prop 10 passes and enough, real estate investors are upset, they're going to throw a lot of inventory on the market, which could depress prices and, in my world, be a great buying opportunity. So that's something I'm desperately watching.
California once again proving that they're a whole other country for crying out loud, right? I mean, you guys already have the $800 a year in LLC filing. Even if your LLC is in Indiana, you still have to pay that.
Yes.
Oh, yeah.
Yes, we do.
Unbelievable. California. I love you.
Yeah.
I love you. Michael, great to see you this afternoon. Thank you so much for joining us. How can people connect with you? And we'll have links to your channel right here on our page.
I appreciate that. I have a YouTube channel. It's called One Rental at a Time. It's actually the story that I'm trying to share with folks, that they can just get one rental at a time and achieve at least some semblance of financial freedom. Either if it's just 3 or 4 units, it doesn't have to be 175, but that's my YouTube channel, One Rental at a Time.
Perfect. And we'll have links below to that. So check it out. Michael, great to see you. Thank you so much for joining us. We really appreciate it. And thanks to all of you for downloading and subscribing to the show. We really appreciate it. Please, if you haven't already had a chance, head on over to our website. You can grab that Freedom Cheat Sheet, which is right here. You can click on it in the little drop down, and it'll help you figure out, just like Michael did, what will it take for us to achieve financial freedom? I know what my number was. When we hit that, we want to help you figure that out as well. So download it. It's totally free, and you can take action. But in the meantime, I want you to go out there and take action. Start with that one rental property. That's all it takes to achieve financial freedom. We'll see you next time, everyone.